From the heart of Silicon Valley, it's What's Up in the 90s. An entertaining look at people, places, and things, and how they affect you, your family, and your career as we move into the 90s. Now here's your host, Brian Stuckey.
Hello, welcome to What's Up in the 90s. We've got a show for you. There's been all sorts of refinancing going on lately, and so we're going to talk about refinancing. If you've got a home, then it's a great time to refinance. Interest rates are so low. I'm Brian Stuckey along with Tina Haynes, and that's what we're going to discuss. Our guests today are Robert Bohr from All California Title, Patricia McGuire from California Mortgage. She's a processor, as well as Kevin Guest, who's a loan officer. And I want to thank you guys for being with us today.
Thank you.
Thanks for coming.
But with all the refinancing going on, it's a blessing to have these guys here today because believe me, there's a glutton of refinancing going on right now, and I know they're taking off a busy schedule to be here. Robert, what's it been like out there with the refinancing going on?
Well, hectic at best. Everyone trying to close their transactions on time so that they can get the best rate. We see some people maybe waiting from time to time before they close, some reluctantly, and some others that have closed maybe later than what they should have. Title reports are running a little behind. We're seeing, when you say glutton, we see probably twice the number of transactions in any normal month being transacted right now. So we're seeing a backlog, and the title reports probably in the industry are running anywhere between, where it used to be 3 days, now we're talking about 2 weeks before you get a title report.
Can we just take a quick step back and talk about a little bit how you guys interact? Maybe not the people here, but how your individual organizations kind of give us an outline on how you guys talk and work out a loan from beginning to end. We've
Sure.
got, you work with a title company.
Right. The title company, of course, we're somewhat the enemy, if you will. We are dependent on all of each other, rather each other for the transactions to close. This young lady, being the senior loan processor, would typically open the escrow and begin the transaction. By that, for escrow anyway, she provides us with the buyers, sellers' names, borrowers' names, if you will, the property address information, existing loan information. And from that, we work with our title division, which researches the records to determine, in fact, who in fact is the owner, that the names would match the property, in fact, the lien information against the property, and how many mortgages are outstanding.
Okay, so when do you come into the picture, Rob?
Very early on, after the application is taken and
Because that would be something that Kevin would do
Right.
first. He would deal with the homeowner or first-time buyer.
Why don't you talk about that, Kevin?
Well,
Let's go from the very beginning.
Yeah.
Let's say, let's start this off right. Thanks, buddy. But
The agent's position, he's very reliant upon both Tricia as the head processing and also with the title officers. In a sense, those three entities tie into one result. And if anybody has a problem in any one of those areas, it's going to reflect back to the second or the third party.
okay, if you don't mind, though, if we were to take it back, let's say, I know Tina's a
Sam walking
homeowner.
in as a homeowner.
As a homeowner, who am I going to talk to begin with? And then, if you don't mind going through the process of what happens from there.
Well, first off, you're going to meet an agent. An agent's going to go ahead
Like yourself.
such as myself, where we're at, we have about 28 agents. You're going to establish a rapport with your client, meaning myself establishing one with you. And we go ahead and we discuss what type of needs you have, and hopefully present you with several options as to what can make you meet your goals. Sometimes the goals are obtainable, sometimes they're not obtainable.
Can you make a recommendation before I even walk in the door what type of information would be pertinent to bring to the meeting?
Well,
How can
yeah,
I prepare for that?
That's all. Each agent's going to have his own. He's going to have his own way of setting that rapport. It's to go through the transaction quickly. It's important to bring tax information for 24 months, W-2s, 1040s, profit and loss statements, anything that's vital to proving income and supporting income. You're going to want to go ahead and bring in your homeowner's policy. Generally, there's a $50 fee or a $45 fee on a credit check. If the agent at that point, once we sit down, generally we'll pull the credit bureau, we discuss the credit situation, and I personally would go ahead and throw 3 or 4 different options to the client and give them my advice on each one, pros and cons, and try and convince the client to sleep on it for a few days as to which one's going to really work for them.
Why would somebody want to refinance to begin with if we were to go the very basic needs that they're looking for?
Well, it all depends on, everyone's situation is unique in itself. Right now, the way the market's been, we've had a tendency to have AAA clientele coming out of the woodwork simply because they want this rate, and they've waited since JFK was president to get that rate.
Yeah.
Now, there's other clients, those are considered AAA clients. There's other clients, A- or B+ category clients, which those people have a tendency to always need to have a refinance taking place.
What do you mean by A-, B+?
Well, the A-, to summarize, it would be someone who's got longevity on the job, very stable income, ample equity in the property, no credit problems, and those that the banks are going to bend over backwards to get in
Low
their
risk
office.
type of
No loan
applicants.
risk.
No
Very-
loan risk.
yeah.
Okay.
There's always risk. As opposed to the A-, he may have 2 of those bases covered, but he may have some derogatory credit in the past 12 months or 24 months. Their history will reflect as to what product they're going to be put into.
Is that a category that you guys do with your organization, or is that something typical of the industry where people will rate you coming in the door?
Well, our job's to go ahead and basically tell the client what they're qualified to get. We're supposed to know that.
Okay. So you get the package in, you get the tax returns, and you start qualifying. You hand them over to Tricia.
Right.
Tricia, what do you do from there?
Generally, we take the basic package as it's given, just the application, the disclosures, the signed authorizations, and send out requests for verifications of all the items that they've already included on their application as to be, true and what we're supposed to use as the information to base their loan on. So we would just order an appraisal to provide the value of the property. We would open an escrow to show the history of the property, and then we'd order all the verifications of employment and deposit and mortgage. And in doing so, then when all those elements come together, then we finally
A package.
a package, or actually the real
Out of
story.
curiosity, Tricia, what type of time frame are you talking about here when it leaves Kevin's hands and it's on your desk? What,
Well, in a normal market, I would say 30 days would be about it. You'd bring it, Kevin would originate it, I would have it submitted, approved, you would go to title and sign in about 30 days. What now, the appraisers are taking 4 to 6 weeks, which means that it's not 30 days anymore. It's more like 6 to 8 weeks for us to get you, your actual loan. So.
And do you bring Rob or a person from the title company involved, or is that the responsibility of the client?
No, we would initially open an escrow as soon as the applicant came in with the application.
Okay.
Call
And
him.
then what happens, Rob?
Yeah, Rob.
Oh, back here we are.
Yeah,
Back
no,
to
this
you.
is where you were talking about being the.
Right, yeah, well, the evil one
The
at the end
evil,
of it all.
yeah, that's
Actually,
Why-
we're so interdependent.
bad rap.
What happens is, of course, that we issue the preliminary title report, and that's the report on the property and the owners. That's given to Tricia, and they use that to package their loan, in part. And then you see us at the end. Actually, there's very little contact between the loan officers and the escrow people until the very end of the transaction. And that's when the loan papers are submitted to escrow. Once those are submitted, the escrow officer prepares appropriate instructions, works up the figures to coincide with the paying off the existing mortgages, paying any title insurance fees, escrow, fire insurance premiums, and taxes.
Can I ask a real quick question? Just for our viewers that may not know, what is the importance of escrow? What is it and what is the importance of it?
Well, the reason that you go to an escrow company typically is that you have a third party that you're going to, the disinterested party, if you will. And so we have nothing, truthfully, to gain by the closing of the escrow, other than, of course, the fee for closing. But truthfully, there's no pressure there. And the intermediary is the one that would dealing with the existing mortgages to be paid off, together with any taxes and dealing with the entities, other than again, the interested party being the lender that's originating the loan.
We're very reliant upon the title company. I think a lot of the viewers might be getting the impression that it's a nightmare out there. And I feel right now that if everyone does their job right, that you could still close your loan in a timely fashion. It's getting blown out of proportion that the market is flooded. Well, that's a fact. But if you have a competent agent, and that agent has a competent processing staff, and the title company does their job properly, then it should be a walk through the park. I mean, that's the reason why a broker's in there in the first place.
It typically is.
Isn't it true that something's going to slip through the cracks, though? If you've got so many loans out there, aren't there going to be some mistakes made, do you think, in a situation
As far
like
as
that?
we can see, no. You know, surprisingly, by the numbers, you wouldn't see the mistakes that you might otherwise expect. The title reports, when I mentioned earlier on that they're taking anywhere between 2 and 3 weeks for a title report, that's an exaggeration. By our company standards, we still try to keep it within a week before a title report is issued. And so you can still theoretically close within a short amount of time without too much of a hard.
And you guys are there to really protect everybody's best interest anyway. The title company, I don't see them as the enemy. You know,
A friendly enemy.
Yeah, just do the job and get paid, right?
We're there to serve truthfully the borrowers as well as the loan brokers, and we try to network it all into one. I think it works. I think it works well.
It's been working. I mean, your outfit and our outfit, we're tied real tight, and they're working. They're going. We're
Okay.
closing loans.
And who else is involved in the process, Tricia? I mean, we got a title company, we got a loan officer. Who else are we in contact with in the process of putting a loan together?
Well, we talk to the appraisers, the lenders. Quite a bit of conversation occurs with the lender themselves. They usually, in this market, no matter how much you try, there's still going to be some issue that's brought up when the loan's approved that is a condition upon funding. So you're always in contact with them and
Does
the
that happen
agents,
during the time
borrower.
that you're overseeing the process, or that it's...
Not necessarily. Usually, it doesn't occur until the loan's approved. So just about all of my job is done. And then they condition the funding on certain items that they need from the borrower. And it's at that point where the interest rate is essential.
We're going to need to break for a commercial, and when we come back, we'll get up close and personal with California Mortgage and California Land Title Company. I'd like to thank our sponsor today, California Mortgage, and we'll be right back.
Haynes here today. And we're doing stuff on refinancing. We're talking about that. We got Robert Bohr from All Cal Title Company, Tricia McGuire from California Mortgage, as well as Kevin Guest. And you had made a statement, Rob, and I want to dig into this. Why do you consider yourself the enemy?
Well, it's not the enemy. Of course, it's a lighthearted joke amongst us here. The buyers, borrowers, if you will, sellers, all parties end up meeting with the escrow company. And your office is unique in that you send a lot of the loan brokers with the parties, the borrowers, to sign off. And that truly is unique in the industry. Obviously, in a resale transaction, you'll find that the buying and selling agents will show up in the transaction to help their clients through. And to expect that most people will understand a mound of paperwork in such a short time is truly exaggerating the truth of it. They're given, in our office, a good hour, hour and a half to go through the documents. And as you know, in a refinance, they've got another 3 days to digest all that before it's actually closed. And it's just a lot to take in. So they meet us one time, and that 1 hour, hour and a half meeting time leaves them overwhelmed. And so that's why I say the enemy. They see you folks in the application of the loan. They see their agent showing them that beautiful home. And they see that title company, the escrow person, giving them the mound of paperwork that truly is probably a good 100 pages in many cases to go through. And they're expected to understand that. We were joking before the show that it's easier said than done. We try to give them a good rounded education while they're there. But you can imagine the jargon that we are used to using in the industry is probably something foreign to them. So they leave hopefully somewhat educated, but sometimes you wonder.
And when you're desperate, you just say, there's 5 copies, just press hard.
That's
sign
right.
Here, press hard, sign here. 5 copies, press hard.
Yeah.
That's what I remember from closing my loan. Just press hard, 5 copies.
Did you like your escrow officer?
Well, we
Hey,
had
who's asking the questions here, Kevin?
we did have some issues, and the image was that the escrow officer was holding up the loan. So that's probably something that you have to deal with on a regular basis. But that brings us to a good point in how you guys choose the people that your clients work with.
Well, again, I think it's important for teamwork. And that's where we rely on each other. And we all work as a team, and that's when it works well.
Okay, with a broker situation as California Mortgage is, you're not a direct lender, so it's not like Bank of America. You walk in, you work with their processing staff, you work with their appraisers or whatever. It's a lot different. What's a broker relation? Kevin, how would you differentiate between a broker and a direct lender, let's say like Bank of America?
Well, for one thing, if the client's going to go walk through the door of a bank such as B of A, they're pretty much committed to their time frame. They've got their own in-house appraisers that will go out and do the appraisals, and the client is in a position where they don't have the access that you would as if you went to the broker. The broker can touch with B of A if he wanted to with the package. If he owns the package, he goes to bat for the client. He knows what bank out there is going to go through the process a lot quicker, what the requirements are, the guidelines. He saves a lot of the red tape paperwork for the client. The client, there's nothing wrong certainly with going directly to the lender. But part of the reason why you're going to use the broker in the first place is to make the transaction go a lot smoother and perhaps even figure out which bank has the program suited for them, the best program that's out there for them. It may not necessarily be the one they walk into.
So if you go into Bank of America directly, you're isolated to their programs, whereas if you're involved with a brokerage, you've got other options.
You have a lot of other options with a broker.
Okay.
Especially a lot of people, like from what I've seen in the past couple of months, are really eyeballing the term lock-in. You go to your own institution and you're going to go ahead and lock in with that institution. In the event the rates go down, you are committed on your lock-in. And it's very seldom that institution is going to allow you to move because they have a commitment to fulfill. Whereas you go to the broker, the broker has a slew of lenders out there, meaning 3 digits, where they could go ahead and they could lock in. They're in a position where they could play the market, so to speak, and serve the client's best interest on that rate.
Now, Kevin, what recommendations could you make to someone such as myself who is interested in refinancing and selecting a broker? What are the things to look for?
Well, the first thing I would do would be to get a referral source. Similar to when you take your kid to the doctor is what I tell my clients. Get a referral. Same thing with every client that I have in my office. I ask them to give me 2 referrals. It's my livelihood. And if I feel that if I do a good job for them, they'll go ahead and they'll return that favor and they'll feel good doing it. Another thing you're going to want to do is check with the Department of Real Estate to make sure that the broker has the proper licensing. That's very important. The DRE will know what's going on with agents out there. And also, you'll know after talking with maybe 5 or 6 different people whether or not that you have a good shop you're dealing with or whether you weren't. People in this industry can come in for 3-4 months at a spread, make a lot of money, and then they burn out. They're out of that industry because they just had the wrong attitude about it. Us, California Mortgage, we're there, what, 12 years, I think, now? And we have a team behind us that we've been there a long time.
Ooh, sounds like a little plug there.
It's a great plug.
Hey,
That's what you do if you're a borrower, you come to see us.
Okay. Tricia, with you work directly with underwriters, the direct lenders. You process the loans. What are some of the key factors that you're looking for to see if someone qualifies for a very low interest rate, the best interest rates out there?
Would probably be the value of the property.
Okay.
You can go up to 80% of the value.
And that's based on an appraiser's estimate?
The appraised estimate. And then income, you want to show, the ratios you want to fall into.
And
in
what's
this
that?
market, probably about 33, 36 over 39,
But how is that
40.
how do you factor in, what do you call that?
It's a ratio.
Debt
That's
ratio?
the equity ratio?
Debt to income.
Debt to income.
How is that factored? I mean, if you base it on somebody, what they're making
Well, it's
currently?
a gross monthly income that we use, and then the ratio, the debt portion of the ratio is your housing expense, which includes the principal, interest, taxes, and insurance. So you take that amount and divide it by the income, the gross monthly income, you come up with a housing expense. Then your debt service ratio would include your housing expense plus any installment debts,
Automobile loans.
right, revolving credit. We would add all that together. Come up with the other
so you get your house, how much your house is worth, your debt. What are some other factors that you're looking at?
If you're doing a refinance right now, most of the lenders are requiring 3 months reserves. If you're just doing a loan that's going to lower your payment, you don't want any cash in your pocket, then they want to see 3 months in the bank. If you're
3 months of your mortgage.
your payment,
Your
The
payment.
principal, interest, tax, and insurance.
right, they want 3 months in your bank. If you don't have it, but you are going to get, say, $5,000 cash out, they'll use that cash out that you receive as reserve. So it's, in essence, the same thing. So.
Trish is just touching on three basic things. You have the equity, you have the budget, and you have your credit. If those three pictures come together, you're going to take the best street that's out there on the market. If you have a curveball with one of those entities, then you're going into an A- category.
Okay, so if you got a mortgage late or something like that.
Well, that might not necessarily. Brokers are very creative, and they know what lenders can live with a 30-day late on a mortgage. They know what lenders will not live with it.
Okay.
And
So
that's
they're all
key,
different on how they look at things.
right?
Right, and they'll look at your explanations too. It's not like they're just going to, if you have 2 lates, we don't care. If you have extenuating circumstances, then they understand. So it's not. There's real people out there that are lending money.
Sure.
Rob, I was going to ask you, there's a lot of times, I'm sure, questions come up as far as title cost, as far as title insurance. Now, there's a 5-year rate that you get that's a discount. What is the discount? What's the difference there, and why is it? Why do some people get a 5-year discount, some don't?
Every title company is different in pricing, but for the most part, there are 15 of us in this valley, 15 different companies, and the pricing isn't that terribly different from one to the other. We currently are offering a refinance rate, if you will, call it a revamp rate, that the majority of all borrowers would qualify for, and it gives you 35% discount on the title insurance. A 20% discount is the short-term rate, if you will, and that's given to almost anyone as long as it was insured by any title company within the past 5 years. Again, those policies, the reason that they're given as a discount is because they were insured sometime within the past history. So for the title division, they don't have to go back into the records, back into the 1950s or 1800s, and go back realistically 5 years and understand that it was clear at that point, enough so that we don't have to do an extensive search. So less work on our part means that the consumer wins out.
Okay. And what kind of glitches, what kind of things could come up on a title search?
Well, everyone should expect in any escrow transaction, there are just so many hands into the escrow that you're going to have some minor problems and some minor requirements at the end. Typically, though, in escrow anyway, for title insurance, you find that the title company has to run the name, and by that I mean they punch the name into the computer, and if your name happens to be Smith, it's somewhat nightmarish because a list of liens will pop out.
Yeah.
It isn't cleared by your first name. They don't do that because many people change their first names. And so consequently, the individual there has to have a mini application basically available to them. It's just a small life history form. It's called a statement of identity that's mailed out to have you complete and send back. That title officer then reviews it and verifies which lien is which person's and on. Title plants as they go are up to date within about 2 to 3 weeks' time. So if you're closing an escrow and a lien was filed within the last 3-week period that we aren't blind to at that point, then of course at that point, then that may come up at the last minute. But barring that, typically there are very few last-minute problems. A couple of conditions that we might have to go back and forth on, copies of pay stubs we see often, but other than that, it's pretty much like clockwork.
If you do run into some glitches, do you normally deal with the broker, or do you deal directly with the client?
Typically all parties. I mean, we deal with the brokers, the lenders directly, the borrowers, and so that's why I say earlier on, it isn't to pat these people from California Mortgage on the back, truthfully. It is that the teamwork exists, and with that teamwork you have not us working against each other, but we're truly trying to close the transaction together so that the customer benefits.
Yeah. No one benefits if the transaction doesn't close.
Right.
Kevin, you might be the best guy to answer this question. Interest rate's going to go up or down, you think, in the
You
foreseeable
can ask
future?
100 Kevins and get 101 different answers on that. If I were to personally advise anybody right now, I would say lock it and close it. I wouldn't play the market any longer. In a sense, people right now are a victim of the frenzy. Rates are still at a 20-time low with the exception of several weeks back, and I would say to close the loan.
There you are.
Okay. And Tricia, do you have a feeling on that? We've only got a few seconds here, but
Oh, I say they're going to go down a little bit.
you think
A
so?
little bit more.
Rob?
I'd close it.
On the count of three, let's all go up or down. What do you think?
Yeah, I'll tell you, something you may want to make note on is the home buyers and sellers show this weekend.
That's coming up. They do have a home buyers show coming up at the San Jose Convention Center, Kevin?
On Sunday the 23rd.
On Sunday the 23rd. So try to make it out there. We've got to go. Goodbye.
Thanks for joining us.